Morning, everyone. Hair's really wet. How's everyone doing? I hope you're all having a great Thursday. The week's almost over. Wow, and we had a lot, right? We had an interesting week. The Bulls took it. Let's see if they can take it a little longer. I'll give you guys some levels, but the ECB next week. We have a crap load of big tech earnings next week. We kicked it off with Tesla. Tesla did fairly well. We'll talk about that as well. And we'll talk about also the potential for next week's Fed topping out, right? And what we have with the ECB, because ECB center of attention right now, for the time being, we had the Fed that started rate hikes in March, set to do another 75 basis points from what I saw yesterday. Let me just check that again because Fed Watch futures, they change the probabilities all the time. So like if you go to like cmegroup.com, or you just type in Fed Watch futures or countdown to FOMC, you'll see what the probabilities are of certain hikes. So right now, 75 basis point hike, there's about a 70% chance of that, about 30% chance of a 100 basis point hike. And last week at one point, there was an 88% chance of a 100 basis point hike, right? And then some of the data subdued that. However, the point being, the Fed started hiking in March, right? ECB has yet to raise rates. They've prioritized the economic growth more so. And in fact, the last time a central bank raised rates was in 2011. So 11 years ago. In the aftermath of the European debt crisis, that's when they did it. So over the past few months, the ECB also looked at the potential idea of telegraphing a 25 basis point hike, though a 50 basis point hike has not been necessarily ruled out. And that would be extremely hawkish based on the economic stance that they've been taking for the last 10, 11 years, right? So the big central bank in Europe is really concentrated on the inflation matter, as the euro is still on the back foot. The ECB is also hesitant to get too aggressive on the monetary policy front because, well, if you relate it to the Fed, obviously not so much, but a lot of this is based on the looming recession that was kind of pushed on by the Russian invasion of Ukraine. And that stance, however, really sees Russia and Moscow in the driver's seat for all of this natural gas, all these gas supplies, and even a higher energy price that could put them further behind in the inflation curve, which then propels heavier increase in rate hikes. And then obviously you have to have this monetary policy engineering that gets to a soft landing, right? So it's a very difficult task. But the ECB's decision today will reverberate through about 27 different member states in their economies, and that could expose more indebted countries like Italy, for example, to more financial trouble. We saw, again, Italy, I feel like it was a few weeks ago at this point, was the first country that had that interest rate reinvestment risk that they talked about, right? The bond market was in trouble, and they lie in the weaker sector of the Eurozone. So realistically, those Italian bonds, along with like the other weaker countries, Italian bonds like Portugal, Spain, Greece, uh, and even geez, there's so many here, sorry, and even like the remainder of the ECB country bond markets can feel that pressure for sure. So there's a little note here. The situation remains even more precarious on word that the Italian Prime Minister Mario Draghi, who's a former ECB president, actually, would resign, prompting Italy's 10-year government bond yield to jump above 3.5%. Also, the MSCI Italian ETF, right, EWI, actually dropped 4.2% during yesterday's session. So they're already starting to see that kind of shakeup. There's also in the ECB, right? Speaking of soft landings and trying to organize this, realistically, there's an anti-fragmentation tool that is attempted to be implemented here. The ECB is trying to limit the spread between the yields across the eurozone, and the ECB is also poised to unveil a new stimulus plan during today's meeting. So it doesn't really make too much sense, right? New stimulus plan plus also looking to hike rates. It's just they're all over the place at this point. I don't know what kind of soft landing they're trying to construct, but it doesn't seem very plausible. Um, Investors will be paying close attention to the details of the new bond purchase program, including what assets policymakers are considering buying and under what circumstances. So Lagarde is likely to stress again, ECB's new president, Lagarde is likely to stress the temporary nature of the instrument owing to the exceptional circumstances that the euro area finds itself. So she also underline the ECB's determination to secure the integrity of the monetary union, thereby trying to invoke whatever it takes type spirit. So it's going to be a very interesting task. We'll probably watch the ECB meeting today, see what this stimulus plan is, because they keep pumping QE, but they're also looking to hike rates. Seems very counterintuitive to a certain degree, right? And they look like they're in a lot of trouble, and that could resonate into right U.S. and the remainder of the world. Right, it's a large economy and large area. But to talk about the first mega giga cap company that reported earnings, right? It was Tesla yesterday. Tesla actually beat earnings. I was mentioning that ECB already raised rates. Where was this? Was it this morning? They're in a different time zone. Let me see. It's the 21st of July. Wow, time really flies. ECB press conference, 8:45. I don't really see anything, to be honest. It was just now, or they just started, I guess. I'm not sure. I haven't seen anything yet. If they raised rates, then damn. I guess they were doing it while I was talking here. But Tesla was the first mega cap company to report earnings yesterday. They actually beat. They posted after hours on Wednesday, and ultimately they were up nearly 2% a share. I haven't really checked this since I left my other computer. And the electric vehicle maker posted stronger than expected financials, right? 57% beat in earnings per share year over year, right? $2.27. Hold on. What was that? Someone knocking on my door. I'll deal with that later. And then revenue, $16.9 billion, 42% year over year. The strong bottom line figure appeared to put to rest some concerns about the gigantic money furnace, gigafactories in Austria, Berlin, while free cash flow rose above estimates at 619 billion versus the consensus of 500 billion. So Tesla cars, right? The price of the cars are up 25 to 30% from about a year ago. The firm's automotive margin compressed to 27.9% in Q2, and the margins also fell below 32.9%. That number impressed in the first quarter and 28.4% notched in 2021. So the EV maker previously reported disappointing quarterly delivery numbers, about 250,000 vehicles, and is facing headwinds that include raw material and logistic costs. So we see that a quote here that Musk talked about. We've raised prices quite a few times. They're frankly at embarrassing levels, but we've also had a lot of supply chain and production shocks, and we've got crazy inflation. So Elon Musk announced on a conference call, Tesla will also jack up production by 70% in the second half of 2022 to meet its annual delivery goal of 1.5 million vehicles in the face of China's zero COVID strategy and supply chain crisis impacting all automakers. So Musk didn't give a production forecast for the year, but he also said that the company will likely to achieve record output. They also dumped 70%, 75% of the Bitcoin apparently to free up some cash, but realistically, it was a pretty solid number. Forward guidance wasn't that crazy realistically, so those are some of the main figures that we're looking at. But they did overall pretty well. They're expecting to deliver aggressively in the second half of the year. They did talk about the supply chain issues, but overall, like fairly good earnings. And they did talk about freezing hiring that was earlier this year. But realistically, this could lead some of the earnings to come, right? I know that yesterday, I'm going to lie to you, I feel like it was Google that told the world that they were going to freeze hiring. But these freezes of hiring, if they get followed by actual employee cuts, then that's something to look for. And we're going to see what the rest of this mega cap tech has to do with earnings, because if they report poor earnings, maybe they might not report poor earnings, but again, the supply chain issues and the inflation is going to be a huge factor. But the biggest one is going to be the forward guidance, right? What's going to happen with the forward guidance in these mega cap tech companies? If the forward guidance is really poor, then you're going to get that downside slip in a lot of these, and that's where we start to actually see things top out. So I'm going to probably be looking for some kind of shorts into next week, especially into the Fed, to open those up, and in anticipation that the forward guidance isn't that hot, realistically. So we'll see how that shapes up. So a lot of people are telling me this morning ECB did the 50 basis points. So that's good to have you guys here to tell me about that, because I didn't really see that. So 50 basis point hike by the ECB while they're still looking for a stimulus. Insane, I guess. I don't get it, but we'll see how soft of a landing they get and what happens with the spreads in individual countries' bonds, and the overall interest rate risk in those bonds. So that's going to be pretty interesting to see. They hiked. It'll probably kind of reverberate into the U.S. as well. Next week, we're expecting a 75 basis point hike by the Fed, and we'll see how that shapes up. So the main thing to watch for next week, because this week's almost over realistically. This week, I'll see if they can pump some of that upside. As long as we can stay above 39.50 or so, I think they can maybe try some of that upside. That's a huge, huge barrier where we have a distribution block on the S&P futures. Above 39.75, obviously there's going to be some kind of buy stop movement. But realistically, let's watch what goes on with the Fed next week and a lot of the earnings next week, right? We got that mega cap tech. So thank you guys. We'll open the room. We'll see you in there, and let's chat soon. I'll see you guys tomorrow.